Taking a look at the state of the consumer, it's been a mixed picture to say the least. Well into the spring season, we've heard from retailers like Macy's and Home Depot saying that consumer spend trends have weakened this quarter. But despite challenges from higher inflation, households continue to spend at a healthy pace in May. Bank of America released findings from its latest consumer checkpoint report, which showed credit and debit card spending stabilized last month. For more, we're joined by David Tinsley, Bank of America Institute senior economist. Thank you so much for joining us, David. So looking at the title of this note here, The Young and the Restless. So we're talking some generational differences here. Talk about what stood out to you from this latest data.
Yeah, well, as you say, broadly speaking, the overall picture is stable. But really, this title comes from the fact that younger generation spending is a lot weaker than older generation spending. It's sort of 4% difference year on year. When I say younger, I'm saying Gen X downwards. So anyone below 50, really. And then really the older, upwards of that. So that's really the striking thing. And the restless in this title, this comes from the movers. One of the reasons for this difference is because when you look at the data, younger people move house about twice as much, twice as frequently as the older generations. And every time they move, they face higher rent, higher mortgage rates, and quite possibly higher house prices. So they have, in a sense, a fiercer gale blowing in their faces from housing costs.
And so, David, I don't know if you just heard what Josh was talking about, that there seems to be sort of a shift in the most dire recession predictions coming from some of your economist colleagues across the street. How does what you're seeing in the consumer picture feed into whether we're going to be getting a recession and when?
Well, that's an interesting point. I mean, the consumer isn't in recession. They're doing quite well, thank you very much. Since the start of the year, this month was, flattish, but by and large, they've also benefited from a little bit of a headwind from lower gas prices. But I think, and this is where I'm not a forecaster in my role, so I won't seek to project when the recession will occur or if it will. But I think a lot of forecasters have always said the recession would probably come outside the consumer in any case. So for construction, business investment, trade maybe, those kind of things. So the consumer is strong. I don't think that necessarily means the US can't go into a recession.
So if the consumer is strong, does that necessarily correlate to companies still having pricing power, or has pricing power receded?
That's a good question. So I think, going back to my earlier point, this generational split has a role there. So in aggregate, the picture's decent. If you're selling into markets aiming at the older generations, you're probably doing better than average and you've got pricing power. If you're aiming more at the younger gens, maybe not so much. I suspect this generational spend story translates across into different kind of perspectives from business on how they are faring overall.
And David, what are you seeing in terms of what different generations are prioritizing in terms of their consumer spend?
Well, what's happening essentially is it's still really this story of an unwind of goods spending into services. And we're seeing that really across all generations. But I think particularly amongst the older generations, travel, international travel, is doing very well. Cruises as well. I think in a sense, as we go up the generations, the travel is really standing out.
David, I don't know if this is research you guys have done, but I've been looking at your note from today about the generational differences. Is the gap that we're seeing typical on a historical basis? And do Gen Z and millennials have the potential future earnings power enough that they will eventually get to the current spending level of the older cohorts now?
Yeah, right. So, I think typically you wouldn't expect the size gap to persist for that long. And when you look at the accumulation of wealth, it's very unequal, really, across the generations. Older generations have 8 times the amount of net wealth than the younger generations. And there's always going to be some of that, because obviously people accumulate that over their lives. But quite a part of that is also just house prices. And the fact that this tight supply in housing, which has persisted for a long period of time, has forced up prices. And that's benefited people who own and disadvantaged people who don't own. And so I think, there is this kind of built-in, if you like, headwind blowing against the younger generations currently until that housing market, until particularly supply comes on in more significant amounts.
Yeah, that's quite interesting. So I guess we'll keep in touch and see if that starts to happen. David Tinsley, Bank of America Institute Senior Economist, thank you.
Thank you.